How's it going, traders? I hope you're all well. I hope you all have had an amazing weekend and an amazing first trading day of this week. Pips of Persia here, coming to you with another weekly market outlook video, preparing you for the trading week of 25th of March 2019 to 29th of March 2019. Now, again, as usual, before we get started, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk, therefore, never risk more than what you're willing to lose, since past profits do not guarantee future results. From the pairs that I'm analyzing today, as usual, make sure to save the ones that you like. The analysis agrees with yours. Come back to it in a few days and see how we played out. Goes without saying, if your analysis disagrees with mine in any way, stick to your own analysis and stick to your own predictions for the market. Okay? Don't assume that my analysis is in any way better than yours. That's the best way for you to learn, to trust your own analysis. Make sure to jump on my Telegram as well, join my channel. The link is right over here. If any of the pairs, my attitude changes towards them, I'll be sending that on my Telegram, sending an update about it. On top of that, if I go ahead and analyze a few pairs that I'm not going to be covering in this video, then I will also be sending those on my Telegram. Now, the news for this week. We can see that we do have quite a few different high impact news for a lot of different currencies, which will be impacting quite a few different currency pairs across the board. Some of the more important news that I'm looking forward to is this Wednesday, 8 AM London time, news for Euro, where in any way, if this speech is hawkish, meaning quite confident for the economy, I'm going to assume buy positions for Euro. In any way, if it's dovish, meaning it's not so confident, with the way the speech is carried out, then I will be short on Euro. I'll be selling Euro. Another news that I'm looking forward to is this pound news over here and US dollar final GDP news. These are the type of news that can suddenly shift the market very quickly. So keep an eye on Forex Factory and make sure your trades are safe against it. Let's go ahead and get started on our currency pairs. Now, New Zealand dollar versus the Canadian dollar. We can see on a daily time frame that we do have this trend line coming down, where we've got in the one touch, second touch, coming over here for the third touch, and a potential double top formation over there. Okay? However, one thing that I don't like about this is the previous week's closure. That's a very strong, impulsive, bullish closure, closing above all of these previous weekly closures. Okay? This can potentially indicate a move up. However, this is the way I want you to look at the market right now. We are coming to form a very, very important daily divergence on our MACD. For New Zealand dollar versus Canadian dollar, we can see that the MACD has clearly formed a lower low over here, right? And our market, the candlesticks, is looking to create a new higher high over there. What is this potentially telling me? This is potentially telling me even if we don't get a move down now, we can climb up and then continue to the downside later, if that makes sense, right? So we might get a fake breakout and then the continuation to the downside to start. These are the sort of cases that I'll be looking for a important candlestick confirmation on a 4-hour time frame before I execute any trades. So any sort of 4-hour time frame that I'll end up closing as a shooting star, evening star, bearish engulfing candle, mother buying sidebar where we get a break to the low of the mother bar, then I will go ahead and execute some sell positions on it. Without the candlestick patterns, I will not be executing sells. Provided this divergence goes well and we get a nice candlestick pattern, we can actually write this pair down for quite a few hundred pips. So definitely something to keep an eye on. Euro versus the US dollar. On a weekly time frame, when we look at the previous week's closure, we can see that we've got a very long wick, forming a very nice shooting star formation over there, indicating a bearish reversal signal for the market to drop. Okay? That was also created at this previous zone of reversal, right over there. Now, how am I going to trade this? On a 4-hour time frame, when I look at it, we are still within this channel. So, I'm expecting a potential rise to our key fib level, around 61.8, and the continuation to the downside to start. Now, EURUSD, obviously this is a pair that's going to be affected by the Euro news on Wednesday. Therefore, is something that I would either want to have my trades broken even before the news, or watch the news and take trades based on it, which is definitely not something I would recommend doing, especially for people who do not have enough experience in the markets. So it really does depend on the news which way this market could go. If the news that's going to come out for euro is quite dovish, then this pair is going to go in our favor very, very beautifully. Pound versus the Japanese yen. This analysis is purely based on previous reversal zones, nothing more than that. Where I can see for pound yen, I have a reversal zone over here, another one over here, so I'm expecting to see if the market comes down, then I can potentially take some buy positions when it reaches that zone again, provided I get a candlestick confirmation. If that zone gets broken to the downside, the next buy zone would be down here, where we have a reversal over there and a reversal over there, expecting another very impulsive reversal over here. Okay, how would I be treating these? As soon as the market reaches this region, I'm going to be looking for candlestick confirmations. If I don't get any, I'm not going to enter. If I don't get any, I'm going to wait till down here. If I get my candlestick confirmations then I'll enter there. And if you guys don't know what I mean by candlestick confirmations, this is another reason for you guys to jump on my Telegram or read the book called Candlestick Trading Bible. Definitely something that will help you. New Zealand dollar versus the US dollar. On a daily time frame, we are within this triple top formation right over there. Once, twice, 3 times over there. And we can see that we've actually formed another shooting star over here. Okay. Now, what are my potential expectations? Number 1, on a 4-hour time frame, I want to see if we can potentially get another double top, another shorter scale double top before the drop starts. If we don't go up as much as that, then what I would expect is a potential bearish flag to be formed. Something like this, where we'll end up getting a 1 to 2 to 3 to 4 to 5 move before the major drop starts. Two different scenarios. However, both of those scenarios pointing to a potential sell. If we get that 1, 2, 3, 4, 5 move, I would expect the 5th move to finish somewhere around 61 to 71% Fibonacci. Okay, so again, if I want to go ahead and draw it, it would be a 1 to 2 to 3 to 4 to 5, and then a potential drop to start after that. If not, then obviously the double top formation and take your sells based on that. Australian dollar versus the Swiss franc. So this is one of the pairs that was analyzed for the past couple of weeks, and the analysis went quite well in both weeks. The head and shoulder worked to perfection. We got reactions of fib levels, and we got reactions of our trend lines as well. So we finally ended up closing below this zone over here. Okay, finally ended up closing over there. I was expecting a potential reaction of this zone to take my sells based on that. Yes, I could have treated this as a shooting star. However, the previous candle was a Mariposa closure on the 4-hour. I would not have wanted to take sells against that. So, I'm still going to remain bearish on this pair. However, my potential sell zones are going to be just a little bit higher. So, this is the analysis that I'm looking at for Australian dollar versus a Swiss franc on a shorter time frame, such as the hourly. I have a shorter counter trend line coming down over here. Draw it a little bit better. Yeah. So 1 touch, 2nd touch, waiting for a potential 3rd touch. Where that 3rd touch happens, I would expect it to react to my key fib level as well, and this previous reversal zone over here. Provided that goes well, this is another pair that I will be riding down for at least down to -27, which would be at least a 70 pip short intraday trade, or you can ride it down all the way to our final TP, should be over 100 pips. My final take profit would be at 0.696. Still bearish on Australian dollar versus Swiss franc, definitely something to keep an eye on. Canadian dollar versus the Japanese yen. Now, for this pair, we have gotten our left shoulder, head, right shoulder formation. Okay, the head and shoulder formation very well. Reacted quite well to the head and shoulder formation, to the previous reversal zone on the left shoulder. We broke below our neckline as well, right over here. So all I'm expecting right now is a potential retracement to the upside to retest the broken through neckline, and the continuation to the downside to start from there. That's it. No specific analysis for this, no Fibonacci, no trend lines, nothing. Simple head and shoulder formation, breaking retest of the neckline. I genuinely do believe CAD Japanese yen can actually drop all the way to 79.700 as our final take profit. Meaning if it does come up to the 82.5-ish zone, that my potential sell zone is around there, this could be a very nice 280 pip trade to the downside. Keep an eye on this as well. Euro versus New Zealand dollar, not one of my favorite pairs. I've got a few different scenarios for Euro versus New Zealand dollar, and I'm gonna have to kind of take the trade as it comes. I can't predict this quite well. Scenario number one, we have this previous reversal zone down here, where when the market previously reacted to it, it went up by about 800 to 900 pips, right? So I can assume that the next time the market comes and touches this zone over here, we will get another push up. Maybe not for 800 pips, however, we will get a push up. So that's scenario number one. Simply wait until we react to this level and then buy it up. Potential scenario number two, wait for the market to react to our trend line yet again and take sell positions down. That's scenario number two. Scenario number three, wait for a clear break and retest to the downside of this zone, take further sells to the downside. Okay, that will bring us to satisfy this very not good looking head and shoulder formation over here on a daily time frame. This is still a head and shoulder formation, and still has a lot of room to drop, because I remember we reacted to a weekly trend line up there, so it does have a lot of room to go down. Point is, where can we take our potential sells, or if we want to take counter trend buys on this pair. And don't forget that the kind of simple structure of the market over here is a flat bottom triangle, provided we get a reaction to that zone over there. Market creating lower lows, therefore an impulsive break to the downside is more likely. New Zealand dollar versus the Japanese yen. We have this trend line coming up. Okay, now there's two different ways to, again, trade this pair right now. One, I can wait for another tap off of this trend line and take potential buy positions around there. Or two, I can take a very nice intraday short position. We have a trend line on the Audi time frame, one touch, second touch, coming up for that third touch, and a fib level reaction. Provided I get some sort of a candlestick pattern on the Audi time frame, I will be selling this down for about 90 pips, and potential buy positions to come in after that, provided we don't break this trend line to the downside. It's a very simple analysis. I don't really need to say much about it at this stage. It's just a matter of being patient with your analysis and see where it goes. Australian dollar versus the Canadian dollar. On a daily time frame, trend line, one touch, second touch, again coming up for that third touch over there, and getting closer and closer to this previous reversal zone over here. Just waiting for the market to come up, react to that level, and take very nice sell positions down from there. In terms of potential divergence, let me have a look. We're not really, the market isn't really diverging as much as I wanted to. However, in this specific case, if on a 4-hour or the daily time frame I end up getting some sort of a candlestick, a bearish reversal candlestick formation over there, I will assume some sell positions, because at the end of the day, the general structure of the market is still bearish in my opinion. Euro versus Swiss franc. Similar to EURNZD in terms of analysis. Simply identified a previous reversal zone down there, expecting the market to tap it off to take buy positions, or if we end up breaking the zone to the downside, goes without saying, or if we don't get any sort of candlestick formation, goes without saying, take sell positions over there. Very, very simple analysis over here. Euro Swiss franc is not one of my favorite pairs. I look at it as a very slow moving pair, a lot of consolidation, but if you guys like trading it, this is definitely something to keep an eye on. Just mark this zone and trade it off simply just this zone and candlestick patterns. Euro versus Canadian dollar. trying to think, why have I saved this pair? I believe I've only saved this because of this previous reversal zone over here as well. All of the euro pairs, I'm more or less trading them off the previous reversal zones. One touch, second touch, third touch, where we came up and touched it, and the market just dropped heavily. So right now, if I get another reaction off of this level, I will be expecting some sell positions to come in for euro versus Canadian dollar as well. A move like this to happen. Again, exactly like all of the other pairs, do keep in mind this break and retest. Always give yourself a few different scenarios to work with, and regarding which scenario will you go ahead and execute, that comes down to candlestick patterns. Make sure to read the book that I mentioned, jump on my Telegram for me to inform you when a certain candlestick pattern is formed as well. These are all of the pairs that I was looking at. I do have gold saved over here as well, but it's not really giving me exactly what I want it to, for me to go ahead and give a long-term analysis on gold. The only thing that I can see happen right now for gold is this bearish flag formation right over here. Getting close to 61.8 and 71% potential sell positions to come in around there. Not one of my favorite trades right now, so I'm just going to let this come to me around Tuesday and Wednesday. I'm going to reanalyze it and see if it's good. Then I'll go ahead and send it on my Telegram. So that's all the pairs that I will be focusing on for this week. I'm going to wait until tomorrow, London session, to see how the Monday closure went and react based on that. Always remember to wait for price action, wait for candlestick confirmations before you execute any trades. Goes without saying, make sure to jump on my Telegram. I'll leave the link in the description as well to inform yourselves about different trades that I might be taking, if my attitude changes about a certain pair. And if you guys don't know what candlestick patterns are, again, on my Telegram I speak about candlestick patterns as well. If you guys have any questions, please do not hesitate to contact me on my social media. I'll leave the details in the description as well. Let me know what you guys think about the analysis. Let me know if you agree. Let me know if you disagree. Leave some comments in the down below. And let's have a great trading week.